Welcome to Money Markets and Business Explained today. Well, today you see those stocks there. Those are all Trump's top donors, as well as others. They helped them win, and now they're on top. So how well are they doing? And how well will they keep on doing now that President Trump is in office? Let's check them out today. Thank you. Hello, here we are at Money Markets and Business Explained. Now let's see, we see here the top S&P 500 stocks of June 1973, and that percentage isn't their gain. That percentage is how much of the weight it is they had of the total stock market at the time. Again, 8.44%, AT&T 5.19%, Exxon 4.05%, Kodak 4.04%, General Motor 3.49%, Sears Roebuck 2.73%, Xerox 2.24%, and Roulette 4.92%. 1.71. When you look at them, let's see, how many of them were big tech? Well, I guess you could say IBM, AT&T-ish, Xerox-ish, and General Electric-ish. So 1, 2, 3, 4, maybe 5. But the big boys back then was oil, Texaco, Exxon. 3M was plastics. So that's just something for you to know. And what percentage of the stock market did they take up? They took up 35.55%. So you didn't have as many players back then. That's why you have that. So that's something to keep in mind about 50 years ago, 52 years ago ish, 54, 51 years ago. All right, there you go. Now, here we are today, and I'm showing you this just to show you the comparison of how things have changed. People say, well, everyone's on the stock market right now. They've got to be there, 10 years. No, they don't. But how things have changed within 50 years, you know. When you look at everyone who was there 50 years, not one of them is around today. You see that? So let's see here. Who are the big boys today? Well, you have Apple at 5.9%, Microsoft 5.6%, Amazon 4.05%, Alphabet, Google 3.98%, Facebook 2.29%, Berkshire Hathaway 1.45%, Tesla 1.44%, Nvidia 1.37%, JP Morgan 1.29%, and rounding out is Johnson & Johnson. So how many of these guys are tech or big techs? Let's see, you have Apple, Microsoft, Amazon, Google, Facebook, Tesla, Nvidia. So basically 1, 2, 3, 4, 5, 6, 7. Before it was like only 2, maybe 2, maybe 3. Now it's 7. Even Morgan's a bank. Johnson & Johnson sells all kind of products. And Berkshire Hathaway's a conglomerate. They just get involved in anything they can get their money on, anything they can invest in and make their money off of. See how times have changed? And don't think that these guys here will be here 5 years from now. All of them. I guarantee you, someone's going to drop out. So first on the list is Apple for Q1, fiscal year 2025. Now, Apple is kicking off 2025 with a bang after robust revenue hovering around 120 billion market cap, with their net income still climbing. Now, Apple, as we know, is known for designing, producing, selling iPhones, Mac computers, iPads, Apple Watches, software, and Apple TVs. And they're expanding their services to include iCloud, digital content streaming to Apple Music and Apple TV. And you may have seen some of their TV shows. So looking ahead, Apple is doubling down on investing their next-gen iChip chip technology, augmented reality, and artificial intelligence. Next, we have Microsoft. Microsoft, their first quarter, doing pretty good. They've heavily invested in next generation AI, your Copilot, whether you use it or not, cybersecurity, cloud infrastructure, enterprise tools, and gaming, which is pretty interesting, seeming that they are planning on cashing out of the Xbox, or so they say. Well, their revenue is coming from cloud services, software innovation, gaming division, that's still going. And their Azure, remember, Azure is their cloud services. And have the AI enhancements across all the offices and Windows. So let's see here. How is Microsoft doing? Well, let's see from their Microsoft 365. It generated $28.3 billion for their productivity and businesses. Their Azure was $24 billion. And their personal computing and Xbox, about $13 billion, altogether about $65.6 billion. Not bad. Gross profit, 45.5, and their net profit, 24.7, which is really good. If you remember, Apple had 7%. Theirs is 13%. And they've only paid $5.6 billion in taxes. That's something you're going to notice with all these people. They lower their taxes. Their taxes are literally 1/4 or so what their net profit is. And they spend money, not as much you like to believe, on the research and development, $7.5 billion, and production costs are low. Their cost of revenue is about $20 billion, which is 23%, which is worse than Apple's, because remember, Apple only spends 2%, but Apple is in China. And you know how that goes. Let's leave that at that. Next up is Amazon, the world's largest online product sales retailer. They also do some cloud stuff. They've got rapid growth in commerce, cloud services, and digital advertising. Also, remember, they had the Alexa personal assistant, that Kindle e-reader. I've used it, not impressed. Their Fire TV is pretty nice. And their Amazon and Prime movies and videos, which you may have seen. Now, they also are logistics, and they're fine-tuning their AI, which is Sage, and other stuff. Now, let's see. How are they doing? Well, their revenue is $638 billion. Astounding, right? Well, their online stores bring them $247 billion. Their physical store, Apple still has physical stores, bring them $21.2 billion. Their third-party seller services, $156 billion. Their advertising services, $56 billion. Their subscriptions, that's basically to the TV, or if you subscribe to things online, discounts, that's a $44 billion. And Amazon Web Services, the cloud itself, $107.6 billion. So most of the money they get is from that store. And their total revenue, $638. Plus, they bring in another $5.4 billion. And that's from other investments. Now, their gross profit is $311.7 billion. Okay. And that's after sales, because the cost of their sales is 326. They spend a lot of money to get those sales out. After all that revenue that's come in at 603, they spend a lot more money on sales people, sales software, advertising, etc. Their net profit after all this is $59.2 billion, which is 90%. Not bad. 90% of their operating profit, excuse me. They pay 9.3% in taxes. 9.3 billion, which is, higher than others, but still not that bad. Their operating costs, $243 billion. Look at everything: fulfillment, technology and infrastructure, sales and marketing, general, Apple spends a lot of money. I mean, excuse me, Amazon spends a lot of money to make money. They spend a lot of money to make money. All right, the next one up is Google, also known as Alphabet. And they have a steady revenue growth driven by their advertising dominance, their cloud services, their increasing AI investments, and now they're into self-driving cars and quantum computing, which they aren't really making any money from. Make money from their advertising, their cloud services, and YouTube. Remember, they own YouTube. Now let's see, how did they do their fourth quarter? First quarter's not out yet. The revenue was $96.5 billion, which is kind of on the low end for technology, but big. Their ad revenue they made from advertising, $72.5 billion. Google, right, $54 billion, which they could be making more, but they spend so much time trying to badmouth politics. And their YouTube, they only make $10.5 billion. They could make a whole lot more if they would quit messing around with people on YouTube, but that's how that goes. And they have something called Google Ad Mob, which is their AdSense, okay? And they have Google Play, which is for their Android phones, or I'm currently using, in the Google Cloud. The Google Play, selling those softwares and apps is $11.6 billion. Their Google Cloud, their GCP, is $12 billion. Now, as far as gross profit, they made $55.9 billion. Their revenue is $96.5 billion. Their operating profit, $31. Net profit, $26.5, which is pretty good. And once again, they paid low taxes too. They paid 5.7%, which is like about 1/4 of their net profit and about 10% of their gross profit, and even less of about 5% of their revenue. And they didn't spend that much money on research development, about 13 billion. Actually, they did, you know, in other expenses. And I don't know what TAC is, but they spent a lot of money there as well. I get that's all based their cost of revenue. The cost they spend to generate revenue is about 40 billion, which is about just less than half of the revenue. So they're spending a lot of money to generate. They're spending about 40% of their money, 50% of their money almost to generate revenue. Whereas Amazon was about half as well, and Microsoft, if you recall, was about a third. And Apple was about a little more than half. So you're going to see that with tech a lot, where they spend almost half their money to make money, but they get so many kickbacks and government disses, and their operating expenses are low. So there you go. Next, we have Meta, our good friends over there with Mark Zuckerberg. The city flexed their financial muscles, made about 20% sales, boosted from their 49% net income surge, reaching about 20.8 billion. Not bad, not bad. Now on the AI front, Meta's chatbot is already rubbing elbows with 700 million users. So that's going to be good. That's a great point of advertising for them as well. And with up to $65 billion earmarked for AI infrastructure. And remember Trump signing on a little bit, so they're going to be making a whole bunch, much more money on that in 2025. And they have their Reality Labs Meta at VR and AR, which actually is a loss. It's a $5 billion loss and only $1.1 billion in sales. Because they sold it to a bunch of rich people and all these companies thinking they'd use it, and a lot of people didn't like it. So, it's not paying off for Meta at that aspect. And their expenses run between 114 billion and 119 billion. And they focus on a hiring spree on AI, monetization, and compliance, and that's what you get. Also remember, Meta, Facebook has Instagram, Messenger, the WhatsApp, app, and some digital advertising. So let's see here. For advertising, 46.8 billion. There are other apps, 47.3, and the revenue total 48 billion. Reality Labs, 1.1 billion, and they took a loss on that. But their cost of revenue is 8.8 billion, probably the lowest of any of these guys. That's almost 1/5 or 1/6, 1/5 and about 1/5 to 1/4 of their revenue. Their gross profit is 39.5, which is good, and their net profit is 20.8, which is once again about 40% of the revenue. You're starting to see that with these big tech people, and once again, their taxes were low. Their taxes probably the lowest out of the percentage. Their tax was 2.7 billion, which is a little more than 10%, probably like 12, 13%, that's pretty low. Their operating expenses is 16.2 billion. So you're doing not as good as the other ones, but they're still doing really good for Meta. Next, we have Berkshire Hathaway, and this conglomerate got some pretty good, robust results. They came from insurance, so they're insurance powerhouses, and they have energy investments in a wide-ranging portfolio. And remember Warren Buffett and Munger when he was alive. Instead of chasing every market fad, the company stuck to its time-tested playbook. And that's investing in quality business that weather storms and thrive over the long haul. And they have a whole bunch. I remember they even had something like a cowboy something. Anyway, let's see here. Their revenue for 2024 was $371 billion. Not bad. Not bad. They make $105 billion from insurance, 23.6 from BNSF, which is the railroad, BAT, 26.3 billion from that. That's like Berkshire Hathaway Enterprises. 46.9 from Pilot. Manufacturing, 77.2 billion. McLean, another company, owned 51.9 billion. And just services and retailing, they own all sorts of services. Like, it's like McDonald's, own a piece of McDonald's, own a piece of Coca-Cola, you know, people like that, businesses like that. That's 39.9 billion. So, how much was their net profit? Their net profit is 89.6 billion, which is about let's say about 25% of their revenue, which isn't bad. And they paid $20.8 billion in taxes, which is about 1/4 of their net profit, which is what you're seeing. They're doing better than others, though. And their segment costs and expenses for all that was $317 billion. So they spend a lot of money. Berkshire Hathaway spends a lot of money on people and everything in advertising just to get that 89.6 billion. Remember, they also have a stock and they pay out dividends too. So there you go. Next, we have Tesla. And you know what Tesla is? Tesla's those cars. Tesla's those cars on that charging station, right? Well, let's see. They have the Gigafactory. They have those cars and the charging station for them, and also battery technology that they license. And they also have software. Tesla also licenses its so-called self-driving FSD, self-driving software to Korean automakers and Chinese automakers. Now let's see how their numbers looked. Their auto sales were 72.5 billion. All right. Leasing, another 1.8 billion. And then they get all these little credits, right? Like carbon credits. That was 2.8 billion. They sell their carbon credits around the world. And they're with the ESG nonsense. And their energy generation, storage, the Gigafactory, and all those that I was telling you about, it's 10.1 billion. And the services that they offer, like their fully driving, self-driving software and other softwares, 10 billion, which isn't bad. Actually, that's pretty darn good. Their total revenue is about $97.7 billion. Let's see here. Their net profit was $7.2 billion, which is not that good. That just means it's not even 10% of their revenue like it was with other people. And they paid $1.8 billion in taxes, which is about, 20% or so. Operating profit, their operating expenses were $10.4 billion, which is about 10%, a little bit more than 10% of the revenue, which isn't so bad. Your cost of revenue, the cost to produce all this is high. Tesla's cost to produce revenue was $80.2 billion. That's because they had auto costs, spending money for materials. Materials costs went up high, raw materials, etc. Their energy costs were low, $7.4 billion. And their service costs to service the cars and other things. But their auto costs are really high, which is pretty bad for Tesla. That's pretty bad. But hey, they're still doing well. Their net profit is $7.2 billion, which is about just less than 10%. That's why they're as low on the list. Remember, Warren Buffett's net profit was about 22%, 20 somewhere around there, almost 23. So there you go. Next, we have NVIDIA. Well, NVIDIA's doing pretty good. Remember, NVIDIA, interesting enough, they have a game system as well as their GPUs and their AI, and they have chips that they sell as well, different versions, Let's see, how's NVIDIA doing? Their data centers for storing and processing everyone's AI, be it ChatGPT or whoever, Grok or all these people, is about $18.4 billion. Expect that to go up. Their total revenue is 22.1, which is, low for them, but it's going to go up. They're gaming 2.9 billion, which is going to go up. Their professional visualization, which I have no idea, that's going to go up. And their automotive, believe it or not, they actually have chips in cars. That was about $300 million, which is pretty interesting. And then they have other stuff, OEM, original equipment manufacturing, things like that. Now let's see, their net profit was $12.3 billion, which is astounding. That's about half of their revenue. And their cost of revenue is $5.3 billion, which is about 20-ish% of their revenue, which isn't as bad. Tesla's is higher than theirs, but theirs isn't bad. And their net profit is about half of their revenue, which is pretty good. Their operating profit 13.6, and they pay low tax as well. Their tax that they pay is like 1.8 billion, which is like a little more, almost 20% of their net profit, which isn't bad at all. So NVIDIA's got it going on. They really do. Their operating expenses are low too. Their operating expenses are $3.2 billion, which is about 12%, 13% of their revenue. So this is a company that's running very efficiently compared to everyone else. They're running very efficiently compared to everyone else. I mean, I'm surprised. Next, whether you like them or not, and you like banks or not, is JP Chase. And they're a heavyweight champion of global finance, okay? They deliver a lot of earnings, and with strong loan growth, savvy risk management, and digital banking. Their online banking is pretty top. They've got plans to ramp everything up too and go into fintech and compete in that space as well. So let's see, how are they doing? Their fiscal year income, fourth quarter, was about $18.36 billion for their consumer and community banking, which is kind of low for them. But we saw how the year is going down. Their commercial and investment banking is where they were making about $17.6 billion. Asset and wealth management, $5.78 billion, which bothers me because I would have thought with their asset and wealth management, well, basically it's managing people's stocks and bonds for them, then it would have been much higher. It's only $5.78 billion, which means people have either moved their money out of them into other asset class like gold and silver, or they moved into other banks, or they're having a lot of competition on that front. I think it's all of the above. And then their corporate banking is $2 billion, which is kind of low. That means that's the money that you lend to corporations. So that's pretty interesting. But their net revenue was about $47.56 billion. Their net income, $14 billion, which is about 32% of their net revenue, which is pretty good. They paid low in tax. Their tax about $3.37 billion, which is about 25% of their net income, which isn't too bad. And their compensation, they pay a lot of compensation, $13.1 billion. Occupancy, they pay a lot of money to stay in buildings. That's their real estate, $1.2 billion. And they pay a lot of money for tech communication equipment. That's everything from IT to cybersecurity. That's about $2.4 billion. And their professional services, people at the tellers, investment banking, all the banking people, that's $2.54 billion. And their marketing is about $1.16 billion. And you do see JP Morgan everywhere. That's honest. That is true. And it's interesting because their costs to their revenue costs are low compared to everyone else, which is weird because, you know, banks have to advertise like everyone else, but their cost of revenue is pretty low.